Is said to be close to an agreement to produce vehicles in China for the very first time, and it would allow the electric car maker to avoid an import tax and price its vehicles more competitively in the world's largest auto market. Let's get to our U.S. automotive reporter, Dana Hall, joining us now from San Francisco. Dana, good to see you. So we know how big of a market China is for Tesla. We also know how big electric vehicles are for China as well. So how significant is this deal?
Well, to be clear, we're still waiting for more details. We don't know who the JV partner would be, but this would be huge. Tesla has one auto plant in Fremont, California. If they want to become a global automaker and sell 500,000 cars a year by 2018, they will need additional facilities. And if their first facility outside of the U.S. is in China, that would be a pretty significant development.
It would be. So quantify significant, Dana. What could this mean for Tesla's business there?
Well, U.S. automakers are not allowed to produce in China unless they have a local partner. And without that, their cars are subject to a pretty significant import tax that makes their cars more expensive. So here you have Tesla trying to sell electric vehicles in China, China's government, which has a lot of very ambitious goals around climate change itself, but the cars are more expensive. So if they are allowed to produce the cars in China, they would be cheaper, and so they would be more competitive with their other automakers. But also, the time that it takes to ship the cars and transfer them from the U.S. to China would be negligible. So it would really open up the Chinese market for the company.